All right. Welcome to this episode of Market Shares. I'm your host, Tony Blodgett. And today I have a very special guest with me. I have Lisa Britton, who, good friend of mine. We've worked together for a long time. We'll get into our history here in a minute. But Lisa is on the operations side of the mortgage business. And, I don't think operations gets nearly enough credit in our industry. And I'll tell you, over my career, it's really been the secret to my success, and Lisa has always been a huge part of that. So, Lisa, welcome to the podcast.
Thanks for having me.
Yeah, you made it.
Me in front of the camera.
Well, operations people, like to be behind the scenes, right? And so to get you out and in front of the camera and talking about this is it'll be a fun adventure for both of us.
Right. Well, here we go.
Here we go. So let's just kind of start by maybe giving us some background on how you got in the mortgage business, and then we'll talk a little bit about how we got connected with each other. But what I really want to talk about is you work with a lot of loan officers and you see the ones that have success and why they have success. And there's the whole sales side of our industry, but then there's the whole other side of getting a mortgage loan put together, structured and done and through the pipeline. So I'm going to pick your brain a little bit towards the second half of this conversation to really get into what you think a loan officer should do to be successful at their job, because you could probably do most of their jobs better than they could most of the time. But let's back up. I know that you're like me. You just had a couple jobs here in this mortgage industry. So how'd you get in the industry? Where did it start? And let's kind of go through that story a little bit.
Well, it goes way back. I've been in the business 31 years now. 4 jobs in that, counting this job in the mortgage side. I started in banking right out of high school. And then when I applied for, I think it was my second home I purchased, the loan officer said, "Wow, you really filled out your application completely." And I'm like, "Well, I answered all the questions." And so he hired me after closing, of course. I didn't want to leave my job before. So he trained me to be a processor, and that's how I got started.
Just doing a complete 1003, huh? That's all it takes?
Right? I guess, But that was back in the day where, I'm dating myself, but your final applications were hand-typed.
Yeah.
We had, when we sent verifications, they were hand typed and no corrections on that. It had to be perfect. So guess where I started? That's where I started. And all those copy packages, I was at a broker shop. So you made 3 copy packages and waited 30 to 45 days for your lender to make a decision.
Yep.
So it was quite different in the world we're in today.
Very different back then.
Yep.
Yeah. All the credit reports were like full, RMCRs, right? And there's a whole
full
different
doc
process.
Loans. Yeah. And I remembered when the AUS came out, I'm like, that is never going to last.
Yeah.
Are you kidding me? They're going to put me out of a job?
Yeah. I remember when I first heard about DU, I was quite frustrated because I cut my teeth doing challenging loans. And, if you put together difficult loans, not like subprime, conforming loans, but things that are challenging, and you got to be really creative on how you structure it. And you really got to work with the underwriter to, make your case. And I'm like, wait, I can't talk the underwriter into approving my loan anymore. This stupid computer is going to decide whether or not they qualify. And I was very anti-AUS, but then, I don't know, it turned the corner, and I think it went too far. It got to the point where the AUS would basically approve anything in like 2007, 2008, right? So I think there's a place for underwriters. There's always going to be a place for underwriters. And, let's talk about that, because you are an underwriter. You have your DE and whatnot. So how did you go from processing to underwriting, and how much time did you spend actually underwriting loans?
Well, when I first started, I was a processor, and back then it was before we had the AUS. And so you pre-underwrote the file. You really had to make sure it was good, also because it got shipped off and 30 days later you had an underwriter look at it.
Right.
So you really learned quickly how to really put a good package together, because you would hate to go back to the line, right? And so it was probably, 5 or 6 years into my career. Then when the AUS was coming out, they had what we call pro writers. And that's where the processor kind of pre-underwrote it, and some of the correspondent lines would allow, with credentials, you to kind of be that initial credit underwriter,
right?
Not the collateral side. And so that's kind of where I got started. And then one thing just kind of led to the next. And, and I'm not a person that ever just sits back. I'm a you probably know me.
Oh, yeah.
But, I just never really have enough, right? And so I just kept learning, and I love to read guidelines. I'm kind of a nerd on things. I read all the announcements that come out. So I just kept doing that, and just everyone always came to me. I was the go-to person. And then it just kind of went to underwriting, and then to the Govy underwriting. And then one of the companies I worked for wanted to get their full legal. And what that means is you're going to go direct to HUD.
Right.
Right. And so that's a whole big, thing to take on. That is test case phases, and they put you through the ringer.
Yeah.
And so got us through our DE certifications for that. And then that's when I joined forces with the company you were at.
Yeah. Yeah, well, it was because we had just done the same thing, right? I mean, so in 2008, we had went for our full Eagle and hired Sue to help us go through that process. And then, as we were kind of wrapping up that, we were like, well, we're going to need some underwriters. We're going to need some people. And that's when you joined. And we didn't have the best relationship day one.
Boy, this guy was always challenging me. And that's one thing now we kind of laugh about is don't come and challenge your underwriter unless you're right.
Yeah, exactly.
And Tony was really good about being right. He'd come and sit down next to my desk with his Mari guide back before we had all the online tools.
I love those things.
I know. I really wish I still had mine. But he'd come down there. I'm like, okay, well, it says this. And he says, yeah, but I think it also says this.
Yeah.
And so we go back and forth. And it was really great because I don't mind someone challenging.
Right.
It's really good to think it through and see all aspects of it. And then, I'm sure you'll get to it, but that's one of the things we love about where we're at today is that we just go off the guidelines.
Yeah.
Right.
Yeah. When I first became a loan officer, I was told that it's kind of my job to know as much as an underwriter. I don't think a lot of loan officers think this way, right? They try to put loan, and I don't want to just stereotype, but I see a lot of loan officers who put a file together and then just hope that the underwriter doesn't call for certain conditions, like it's going to slip under the radar. And it's like, I never really understood that mentality because kind of like what you were talking about. I mean, can you imagine loan officers out there, if you submitted your file, you had 45 days to close it and an underwriter didn't look at it for 30, like it better be right the first time around.
Exactly.
And that's kind of the way that I was trained to put my loan files together was, don't even put it in front of an underwriter unless it's right. And if there's something, it's not that underwriters won't question it, but you should have preemptively thought that they were going to question it and address that concern before it ever came up. And then if they brought up something that you disagreed with, you should know, well, yeah, I knew that was an issue. I've actually reviewed that guideline. Here's how I interpreted it, and then we can have that discussion. And so I always love that about working with you is, at first I was like, man, she is difficult, but you also were reasonable. And we have obviously had a great working relationship because we're 15 years now that we've been working together.
Isn't that crazy? How can that be? I'm only like 35, right?
So back to Mortgage Advisory Group. So, that's when we first started working together and you kind of ran it all, you were the VP of lending operations. And so all the underwriting, processing, all of the operations functions kind of reported up to you. And keep in mind, this was, right after the meltdown. So we were dealing with buybacks and all sorts of other challenges. And you and I worked very closely with, dealing with all of those challenges.
And we were mini core on a lot of it. And so for those of you out there listening, I mean, you weren't underwriting direct to the guidelines. You were underwriting to who you were selling to.
Right.
And that's where the overlays came into play is that you always had to have a backup in case lender A didn't want to buy it for some reason.
Right.
And then you had a place to put it. And, we were really good about, getting our loans sold. I mean, you have to be because, a few loans you can't sell could bankrupt you.
Yeah.
But we were really good at that. And it was challenging times during that part of our career, for sure. I loved it though. I mean, I have to tell you, finding a way, there's just gratification in getting somebody in a house is awesome, but just some loans that you get and you put it together and it closes, you're like, okay, wow, that was really an accomplishment.
Yeah.
And that's why I love what I do.
Yeah, I always love doing the challenging loans too. I mean, your clients are more thankful, right? Because this can be a thankless job. And so when you can do something for someone that maybe someone else couldn't do because you took the time to really understand it, research the guidelines, put together a good file, I agree with you. I think it was fantastic. So fast forward, I joined over here at New American Funding, and that was a tough time because, I didn't know what was going to happen long term. But, eventually a lot of the folks that were at the previous company joined over. And I remember when I first started here at New American Funding, and we didn't, as a company, didn't have a presence up here in the Pacific Northwest where we are today. And one of the first things I said is, we need local operations. That's going to be the key to our success. And this is difficult because I think as managers, regionals, whatever, we always think you want to lead with sales and then you'll figure out the operations piece once you have the production. And I just knew that I would never be able to recruit the production without the operations. And this is where this is kind of our secret sauce, and I told the company when I came on board, like, building operations is going to be one of my first tasks. And sure enough, there was an opportunity for us to, put something together with you and the team. And we had only brought on like 4 loan officers. And I'm like, I want to hire these 14 operations people, and I don't have any loan officers yet. But honestly, it was the key to our success. It's what allowed us to scale up so quickly. And, a lot of people saw the growth that we had and were like, man, that's like, you've done an amazing job recruiting, but it's like, I couldn't have done any of it without operations. So I've always been this, sales forward leader in the mortgage industry who secretly knows that operations is what makes it all happen at the end of the day. And you were a big part of that.
Thank you. Yeah, it is really key. And, we wouldn't be here today if it wasn't for our loyal ops team.
Yeah.
We have had people come and go like you do. You have your natural attrition, but it's really nice to have that core group of people that, my philosophy is I work hard and I expect people that work with me to work just as hard. And I think that about everybody that's on our team.
Yeah. Yeah, we have a pretty awesome team. And, like I said, obviously the loan officers, without the business, none of us have jobs. And so I don't want to discount that. But you're just not going to attract and retain good loan officers without great operations. Because at the end of the day, we can talk about comp and rates and, all the shiny things, right? The marketing and the studio and, all this stuff is great. But if you can't close loans, like, none of it matters.
Right. Yeah. And when I, meet with prospective loan officers or somebody coming on new, that's always their first question.
Yeah. Yes.
What's ops now? How is it? And it's not just ops. They want to know specifics, like how does the file flow? Who does what? And, they really want to know. And some new teams we've brought on, they're like, how long have you been together?
Yeah.
I mean, how long have, like, a processing assistant, I'll just give that as an example. I'm like, well, 15 years. They're like, wait, what? The same person? I'm like, yeah. And they're like, how do you do that? And it's like, okay, I wish I knew exactly, but it goes back to loyalty, right? I'm loyal to them. They're loyal to me. And, we take care of everyone on our team. Yeah.
No, we truly do. And we are blessed to have the longevity that we do. It makes a huge difference. So let's talk a little bit. I don't know that everyone really understands the subtleties to the different models in mortgage banking. I think a lot of people think that a mortgage banker is a mortgage banker, a bank's a bank, and a broker's a broker, but it's really not quite that simple. And you alluded to it just a minute ago. But like at our previous company and a lot of companies out there today that don't sell directly to the agencies and retain their servicing. And you can sell direct to the agencies and you can bifurcate your servicing. Not a lot of people do that, but you can do that. But really the two models are correspondent lenders, those that are underwriting to a specific investor's guidelines or a set of investors, right? So like, for instance, we would typically have 2 or 3 investors that we knew we could sell any given loan to. And the underwriter would underwrite to, 3 sets of guidelines so that we would have the flexibility in the capital markets to deliver to any one of those loans. And that's where we could pick up a little bit of margin on our gain on sale and so on and so forth. And, but, although there's not a ton of overlays, it does there are some overlays, certainly, and there's other just little ticky-tack things that these correspondent lenders want with their files, right?
Right. They all have a different appetite for things. And
right.
You can tell that, now years later, you're going, wow, yeah, I really could tell that, this big...
Like certain
lender.
investors will really...
I was almost going to say the name, but I probably shouldn't.
Yeah.
But, it's like, yeah, they don't like ugly houses.
Right.
I mean, so that's a thing. It really was.
Right. They really scrutinize the appraisal,
Yeah.
for instance, right? And so you may get a pushback or a suspense of that sale because of the collateral. They may have a certain way they look at, self-employed income as an example, and they really tend to scrutinize that. And you just know that, if we sell it to that investor, even though it's the best price, we may end up getting it suspended. And then suspended loans are expensive. They can take up warehouse line capacity. If it's a really busy time, that can create other challenges with being able to fund. It's like there's so much complexity to the different kind of mortgage banking models. And I just don't think that the average loan officer or even, processors, underwriters really understand what that is. But I know that, you do. And we felt a big difference when we transition out of delivering into the correspondent world and just selling everything direct to the agencies.
Exactly. And it really makes it so much better for a loan originator to be able to, at any given time, just go look up in All Regs or Fannie Freddie Direct or HUD and just get the guideline, right? Than to think, I got to go look through this set of guidelines that you've posted that has overlays, right? Yeah. It just is just cleaner business.
Yeah. Well, and I think one thing that's nice is whenever there's a challenge with a file operationally, my first thing I ask is does Lisa know about it? Because, Lisa's like, people come to me because they're like, oh, well, you're higher ranking in the company. I'm like, yeah, but I don't know the guidelines like Lisa does. So if Lisa believes in it, then we'll elevate it. And so I think it's kind of funny. And even at the previous company, I was the president of the company. I'm like, did you talk to Lisa? Because, it's like, I'm not going to override her decision because she's evaluating the risk to the organization. That's what underwriters do. And you're always looking at, can this file be done, but be done in a way that it's going to be sellable, insurable, and not be a risk to the organization? I mean, that's what we're constantly trying to balance.
Right. And I think that's, a question I get from loan officers from time to time where they say, well, it doesn't quite fit, but can we just portfolio it?
Right.
And it's like, that's where their lack of understanding of selling direct or underwriting direct to an agency is, well, if it clearly doesn't meet the guideline, then no, we don't just make the loan and then just portfolio it because we wouldn't have an insurable or saleable loan.
Right.
So we don't do that. Right?
Well, and even banks that have portfolio products, they have specific guidelines and rates commensurate with the risk of that particular product. And yeah, there's banks that will hold loans in their portfolio, and we have relationships with banks that will do portfolio products, but you're not going to underwrite a loan to Fannie Mae guidelines and then be just outside of that and say, oh, well, we're just going to portfolio it.
For sure,
no one
does
does
that. You got to pay the pricing because there's a premium to having.
Well, if there's mortgage insurance, then it has to meet those guidelines and so on and so forth. And so, yeah, I think that there is some complexities to this industry that the average loan officers don't understand. And I would argue that those are things that you want to learn. You really want to understand how this industry works because it's going to help you set the right expectations for your realtors and your borrowers on, what you actually can do if you have a loan that's kind of on the fringe,
Right, exactly.
Yeah. So let's talk about what loan officers can do to really help their operations teams. I think that loan officers think, hey, I brought in the business, and, they send a borrower to their website to fill out an application, and then it's up to the ops to figure it out. I would tell you that as a loan officer, you haven't done your job if that's all that you're doing. But what's your perspective on the process that you'd like to see a loan officer take a file through before they hand it over to processing and underwriting?
Yeah, it's a great topic, and one that I've always teased you about is you just need to have like a teaching class where you're teaching this because Tony Blodgett's way of getting the yellow notepad out is really still relevant today.
Yeah.
You have your 4 C's in lending, and it's the same thing no matter what era you're lending in. So for a loan officer, you really do need to stop and listen to your borrower, ask all the right questions, as far as the income and the credit, and gather the documentation and review it. That's where a lot of times where the ball gets dropped is they gather everything. They're a box checker, right? They're like, I got my 2 years W-2s and I got my pay stub. And then they push it over to the next person, and that person might be the file stacker and order out person. They're not qualified to analyze those documents. And now you've wasted a few days or a week or something, and it gets to processing or underwriting, and they're going, wait, guys, did you get out your calculator? Because, they make $25 an hour, but they've only averaged $10 an hour year to date. I mean, why are we off?
Right.
Or, the W-2s don't match, or you're trying to use overtime, but they've only been on their job a couple months and they've never had overtime before. So those are the things where the loan officer, if I could have my wish list, get out that calculator, run the numbers, do your income calc, really review their credit and address any credit issues they have. If you run AUS, that really helps you a lot there. It'll tell you on your AUS.
Got to read it, though.
You do have to read it, right? And depends on your loan type. FHA is more forgiving on some of that than conventional.
Yeah.
But, look at your bank statements. Do they have a bunch of large deposits? Do they have, should we just pull the bank statements and go gift or something? So that's where, the loan officer's expertise up front should be, I've got all this information. It matches the story the borrower told me when I met with them.
Right.
And now I have the next person on my team order it out and set it up and get it to underwriting.
Yeah. So, a couple episodes back, I did an overview of the interview process, that initial kind of borrower consultation, kind of that high trust interview. But part of that interview is not just building rapport, cross-selling your referral partner. It's also digging deep into their employment and how their income is structured. And then, you start mental noting potential red flags, right? When you think you might need to use, commission income, or they do piecework, or they're going to be relying on overtime, right? Then the first thing you should do when you get those pay stubs is not say, oh, hey, processor, I got the pay stubs. You should maybe read them and look at them and see if they support the income that you thought that the borrower made, And so I think it's still my belief today that a loan officer needs to kind of know, all of those questions up front. They need to spend, and it doesn't take long to scan through a tax return and make sure there's not other businesses you weren't aware of, that there wasn't losses showing on a Schedule C. I mean, these are very simple things to quickly identify and look for on their pay stubs. Just do some quick division and make sure that their year-to-date is in line with their hourly wage. And if it's not, why the discrepancy? These are simple math, problems that you can do, but it's going to save you a ton of time because it allows you to address those issues. Again, I love what you said. I think as a loan officer, you should, even though it only takes 48 hours to get a loan underwritten and get your suspense or your approval back, let's pretend like it took 30 days. What would you do different with that loan file if you didn't hear from the underwriter until 5 days before close of escrow? You might be a little bit more careful up front. And I think if we could embrace a little bit more of that mentality as loan officers, we'd have a lot more success. And it doesn't take that long when you know what you're looking for and you just spend a couple minutes, please, just review those things, know what the challenges might be, and then move on.
Right. Yeah, all too often, we have everybody that, they just push the file in such a hurry because they're in a rush. And that's usually the file that blows up.
Yeah.
Because they've rushed through their process. But if you have your checklist, be a box checker. I have my W-2s, I have my pay stubs, but now I need to get out the income calc form. And nowadays, the form is so easy. It's all fillable. You put the numbers in and it does the math for you.
Right.
You don't even have to get your calculator out if you don't want to.
Yeah.
You have Excel.
Yeah. Fill out the form. Well, let's talk a little bit about your role today because it's different. You have a very unique position. We talked about before you were the VP of Lending Operations, so all the operations people, including underwriting, reported to you. Now your role is more on a sales support side. So this is very unique in my opinion and something that I love about the way that we have things set up. But, you're really in charge of managing the pipeline. You also you work closely with the underwriters and the processors and the PAs, and you help set file flow and deal with escalations and so on and so forth. So you get to have like that operations mind and perspective, but really you're accountable to driving the pipeline and the sales side of the business. So maybe talk a little bit about that and what you think is unique about the role that you play today.
Yeah, that role was very unique. When I was first posed that when I came over, I was a little worried.
Yeah.
But I've always worked well with the loan officer, because again, when you are someone who you're geared to get that loan done, you really are on the sales side, right? And so when I came to NAF and they had the area production manager, we managed the pipeline. So I have every loan in the region in my pipeline view. And so, I want to set up good process flow so that we have check and balances so the file keeps moving. Like I try to explain to everyone, it's just a widget really.
Right.
We're moving it along the conveyor belt and we have so much time to get it done. So we have a lot of service levels that we like to work off of so that files don't get hung up in various departments. And those are what I key in on every day.
Right.
Of what all these hot lists and things. I'm a nerd of Excel.
Yeah.
Right? Every morning I'm working on that. And then, with our processing group, they are really good about alerting us if there's a problem. So the processing manager, Lori, and myself, we dig in on issues that arise. And that's where it's so different than any other company I've ever seen is that normally, the file, when there starts to be a problem or a slowdown, it gets lost.
Right.
Right? Well, here it doesn't. I mean, it's right there. And there's nothing, it's just right there. You can't miss it.
Right.
You can't hide behind it.
Right.
Right? And that's what I like. Everything you have accountability.
Yeah,
right?
that's what I like too. So it's very much like you said, the conveyor belt. Like that's what I liken it to. Our operations here is that we know when it should hit each milestone along the way, and if it's not hitting that milestone, then something's hung up, and you're going to notice if it doesn't move on through that service level. And so it makes a big difference because things can't get lost in the shuffle. Like you said, I remember times hearing, a loan officer complain that, man, the processor didn't touch my file for 7 days. It's like, that would be impossible to have happen here because we would see if it didn't move through the system. And you put out some great reports every morning that are really color coded, and we have some goals and metrics that we want to try to hit. Right, like if docs aren't out 5 days before escrow, it's red. You can look at that spreadsheet and just look at what's red, and we know these are the files that need to be addressed. And chances are you probably already know why they're hung up at that point.
Exactly. And that's where that conversation log in the file is great. And loan officers will say that, oh, they haven't touched it for a week. And I'm like, no, they have. Check the con log. And they emailed you. I see it because I'm looking. So you were made aware. And there are things that just get hung up. You might be having an appraisal issue or whatever, or there's a borrower condition we're trying to get. So there are those things that happen. It's still the loan business. Things don't always go smoothly.
Right.
It's how well we can react early and get it handled.
Well, and know that it's happening. I mean, it's one thing for a file to be stuck and everyone to be aware of it. It's another thing for a file to be stuck and no one's paying attention.
Exactly.
Like, that's a problem.
Yeah, right. And that's where, like in this role is so great is that, I always hated where people say, oh, it's ops against sales. Well, it's not. We're all a team. The important part of the team is getting out there. You make it rain. You bring us business. That gives us our livelihood as ops people, right? And then we work on that file and we work together in unison to get it closed.
Yeah.
Right? And so, that loan as it's moving, the loan officers quite often reach out to me. Hey, can I get a rush on docs? Can I get a rush on the funding? Whatever it is. And the nice thing, and this is just me bragging on where I work, is that we are, we just don't have all these big layers of management. It can come to me and I can reach right out to my group and get it handled if I need to.
Yeah.
Right then.
Yeah.
Can't do it every day on every deal because then the guy who's not rushing never gets his loan worked, right? So that's why I like to say, no, come to me because I have, different metrics of, you think it's a rush, but it's not. It's just going to get done in normal time.
Right.
The turn time is 4 hours. You want it quicker in 4 hours? I mean,
right.
So, they just don't understand sometimes that, it's going to happen anyway. They're just nervous.
Right. Well, and you really want them to go to you because you're just a control freak on the whole thing.
I kind of am.
Yeah, kind of am.
Right.
But hey, you know what? That's a good quality as far as I'm concerned. I mean, I have so much confidence in letting people know that, we can talk about rates, we can talk about products, programs, all the shiny things. The one thing I know that you won't have an issue with is operations. We're going to get your loans done, and I think we have a very unique and cool system to do it. I'm just so thankful that we've got the people in place. It starts with the people, but then the process in place that just, it works so well. And I see so many people that get challenged with operations, and, some of it is, you rely on great people, and some great people will do a great job, but then you have other people that don't. But there's no overarching system that makes sure that the pipeline is being managed and pushed through. And it's very unique. And your role is very unique. And I think it's part of our secret sauce. There's no doubt.
Right. Exactly. Yeah. It's something that we're very proud of in our region.
All right. So a couple questions I'd like to ask everybody. You've been doing this for 31 years, you said?
Yeah,
all right.
31
So
years.
What's something that you know now that you wish you knew a lot sooner in your career?
As you get older, you get a little bit more patient.
Yeah. So maybe
and you
some
listen
patience.
a little better. I would just say, really it is all about just hard work. It's a grind. You just have to be in it for the long run.
Yeah.
A lot of people jump into this business thinking they're going to make a few bucks and they're just going to make it quick and easy, where if you make this your career, it's a grind every day, of keeping up with whatever the market is throwing at you. In 31 years, I've seen it all, right? I've seen where, turn times really are at 60 days. I've seen where the market overnight dies and we're trying to figure out where we can sell our loans, right? Because programs changed. Yeah. Then we're looking at a mortgage, the banking problems we're having and the lack of inventory. So really, I say just be a student of the game. I probably should have learned much sooner in my career to be a guideline reader and to not just know about the ops side of it, but to understand the sales side. I watch all the programs that you put on, Mortgage Mastery stuff. I love that stuff.
Yeah.
So I glean as much of that out as I can because I think it applies to ops too.
Well, did you ever think about getting in the sales side of the business?
I did for a minute, but, I don't really want to work every weekend and nights. I feel like I'm open 24 hours anyway, it seems. But no, I don't want to do that side. I like what I'm doing.
I think those of us that are loan officers are kind of, we're probably pretty fortunate that some of our ops people, the best ops people, are happy being ops people because we wouldn't want to compete with them out on the street. I mean, let's be honest. But no, look, it's not for everybody, but neither is the operations. And you're right. You have to have a passion for this industry because it is a grind. And I think that you'll get burnt out if you don't love it. It's not for everybody. But for those that have chosen to make it their career, that are consummate learners and are willing to, keep up on what's going on, I think it's a fantastic career choice.
Adapting.
It's
it's the evolution of the mortgage business.
Yeah. So from your perspective, what do you think are the biggest challenges and or opportunities that we face right now?
The biggest challenge is really just the inventory.
Yeah.
And then the rates.
Yeah.
It's secular on the rates. I'm not so concerned because my first house I bought I paid 3 points to get down to 10.5%.
Right.
That was an FHA loan at that time. My second house, I think I got it in at like 6%. And of course, refied it 10 times probably,
right.
Because when you're in the business,
yeah, it's cheap.
Keep a copy file in your side drawer, right? And so, it's just knowing that if you stay in it, again, it's that grind. You have to be able to quickly adapt to what's happening in our marketplace to see this through. It will see the other side of it.
Yeah. We've seen a lot of cycles in the last, you got 31 years. I'm 25 years. Maybe this is my 26th year. I have to do the math, but it's a very cyclical business. And I can already feel that the market that we're in today, that we've been in here for the last, maybe close to a year, since about March of last year, I can already feel it changing just a little bit. So we're already moving out of this cycle, and we're moving into a slightly different, I think, a better interest rate environment. You are starting to see more inventory on the high end of the market. It's going to be interesting to see how the softening in the luxury market impacts people potentially moving up. What does that do for inventory? We are seeing a little bit higher inventory in the market right now, but that's coming off of the lowest inventory we've ever seen. So it's still very, very low, but slightly better. And I still think interest rates, we'll follow them closely on this podcast, but I still am of firm belief that come May, June, we're going to start seeing lower interest rates as we see more than likely a recession set in. I think housing will remain strong, rates will get better, and we will see opportunities to refinance some of these loans we've done over the last year. It's not going to be a huge opportunity. I think that people go, oh man, rates drop and refis are back. It's like, yeah, we still got like 80% of all loans under 4% out there. So there's not going to be a huge opportunity, but hey, look, we'll take any additional business right now, right? I mean, it's been a difficult year to keep up with. I think one of the biggest challenges is just volume. When an industry shrinks by 40%. Look, we've had to make tough decisions. We've had to right size the organization. Every company has, and we see some going out of business and whatnot, but you can only do that so much, and if you really want to keep your culture intact, you want to keep your infrastructure intact, you really need more volume. And that's, to me, that's been the biggest challenge. And it's, I'm glad to see it coming back a bit.
Right. It is definitely nice. It's nice to be busier. You kind of get off your game a little bit when it slows up.
Well, yeah.
You do. It's funny how, you can always tell sometimes somebody wants to leave early on a Friday, how much work they get done, right? It's, because they're trying to squeeze it into a shorter day. But that happens when you're really busy, too. You just kind of crank it up and you make these efficiencies.
I think you and me are some of those crazy people that just like, we just like it chaos. We like busy.
I do, right?
We thrive on it.
Yeah, like the adrenaline rush.
Well, right on. Well, hey, Lisa, thanks for coming in and having this conversation. I think it's a change of pace for our podcast, but I also think that as loan officers, take some of this advice, that you heard us talking about here today. I mean, being an expert at guidelines, think as if your file isn't going to get underwritten until 2 days before escrow, and the reputation is on the line with that borrower and that realtor, that it better make it through the first time. You want one-touch underwrites, and that's your job as a loan officer to do a great job putting that file together. So if we had more people focus on that part of the business, I think you'd have more success. You'd have a better life as a loan officer, because you wouldn't be, you could spend your time out prospecting, getting new business, instead of fighting fires all the time on loans that got blown up in underwriting. It's a waste of everyone's time.
It is. Yeah. And it's hard to be positive and get out there and get more business when you're worrying.
Yeah, 100%. Well, that's what we got for you guys today. I appreciate your time and attention. I appreciate those of you that are subscribers to this podcast. But more than that, share this with other people. Let people know about market shares. We're going to continue to bring interviews like this that we had with Lisa here today. We're talking ops, we're talking sales, we're talking coaching strategies, recruiting, and then, some market updates. We're going to let you know what's going on with rates, what we think's going on, and it's a well-rounded podcast. I hope you guys are enjoying the content. And until next time, take care. Lisa, thanks for joining me today.
Thanks for having me.
All right.